Spotify stock has seen some significant pullbacks in the past several weeks. In this video, we'll review Spotify stock and analyze whether it is a good buy at this time. We'll also provide 1 year price prediction for the Spotify stock. So let's get into it. Joe Rogan's exclusive podcast on Spotify has got a lot of negative attention recently, with recording artists like Neil Young and others pulling their music from Spotify's streaming subscription service in protest over what they believe is misinformation discussed by guests on Rogan's podcast. Rogan 54 is the host of the Joe Rogan Experience, the top-rated podcast on Spotify, which holds exclusive rights to the program. He has stirred controversy with his views on government mandates, among other related topics. And the controversy has impacted the stock of Spotify, and its shares have tumbled over 25% in the past 1 month alone. In reaction to all the controversy, Spotify has not pulled the podcast episodes in question, but it has included content warnings on some of the episodes. To add more fuel to the fire, in an open letter, Neil Young has urged musicians and Spotify's employees to be free and take the good path and quit the streaming company. The Swedish company Spotify said it works to balance both safety for listeners and freedoms for creators, and that it has removed more than 20,000 controversial podcast episodes in the past 2 years. A few days ago, Spotify Technology issued disappointing guidance on subscriber numbers for its first quarter when it announced the financial results for fourth quarter of 2021. Spotify has announced that it expects to report 418 million monthly active users in the first quarter of 2022, a slightly above market forecast of 417.8 million. However, it predicted that total premium or paid subscribers will reach 183 million, which is below analyst expectation for 184 million. The disappointing subscriber guidance overshadowed results for the fourth quarter, which came in actually above market forecast. Revenue in the fourth quarter grew by 24% to reach 2.69 billion euro, compared with market expectation of 2.65 billion euro, driven by significant strengths in advertising and favorable forex movements. Premium revenue also grew 22% to reach 22.9 billion euro, while ad-supported revenue soared by 40% to reach 394 million euros. Operating loss for Spotify amounted to 7 million euro in the last 3 months of the year. Spotify is forecasting total revenue of 2.60 billion euros for the first quarter and operating losses of 67 million euros for the first quarter of 2022. That said, according to the company's press release, as Spotify moves into 2022 and beyond, the opportunities in front of the Spotify are large and there is a tremendous amount of greenfield on the horizon. It is worth mentioning that in quarter 4, the company repurchased over 300,000 ordinary shares for a value of 59 million euro under the share repurchase program at a weighted average cost of $222.42 per share. In 2021, in the entire year, the company repurchased a total of over 458,000 ordinary shares for 89 million euro at a weighted average cost of $222.57 per share. Spotify has a 1 year price target of $244.69 based on Yahoo Finance analysts. Also, analysts on TipRanks have a 1 year price target of $246.55, with 23 analysts covering the stocks. Of those analysts, 16 of them give the stock a buy rating, 6 a hold rating, and 1 a sell rating, resulting in a moderate buy guidance for the stock. Looking at Spotify's balance sheet, it is showing $4.98 billion in current assets and $8.16 billion in total assets. In contrast, it has $3.67 billion in current liabilities and $5.75 billion in total liabilities. This results in a current ratio of over 1, which is desirable. The current ratio is calculated by dividing the company's current assets by its current liabilities. The current ratio is a liquidity ratio that measures a company's ability to pay its short-term obligations or those that are due within 1 year. It tells investors and analysts how a company can maximize the current assets on its balance sheet to satisfy its current debt and other payables. From a valuation perspective, Spotify is now trading at only 2.9 times its price to sales, which is one of the lowest multiples it has been at in the last 3 years. Though it is higher than the sector median price to sales multitude of 1.68 for the trailing 12 months. Spotify stock is also trading at about 13.7 times its book value, which is a discount compared to the price to book value multiple of 23 about 4 months ago. Though this price to book value in trailing 12 months is much higher than the sector median of only 2.24 for the trailing 12 months. Some of the peers and competitions to Spotify include Live Nation Entertainment, Roku, Warner Music Group, Formula One Group, and Tencent Music Entertainment Group, among which Spotify has the highest enterprise value of $31.9 billion. Among its peers, Spotify stock is trading the closest to its 52-week low price. It also had the worst 1 month's return, though Roku is showing the worst 3 months and 6 months returns. The best 1-year return among these peers belonged to Live Nation Entertainment with a positive 49% plus return. Are you currently invested in Spotify? And what are your thoughts about the future of this streaming service giant? Let us know in the comment section down below. If you enjoyed the video and gained something of value from it, please give it a thumbs up and don't forget to subscribe to Moementum Finance channel for more videos on investing and financial education. Thank you and see you next time.